77% of institutional investment firms now have generative AI deployed across their entire organization. Not testing it. Not piloting it. Company-wide, right now. Meanwhile, most retail investors are still asking whether AI stock tools are a gimmick. That gap is the whole video. Let's define the terms first, because buy side is doing a lot of work in that stat and most people watching aren't in finance professionally. The buy side is the institutional side of investing, hedge funds, asset managers, pension funds, mutual funds, the firms that manage large pools of capital and make investment decisions at scale. This is distinct from the sell side, which is banks and brokers facilitating trades. A recent survey found that 77% of these buy-side firms now have organization-wide generative AI deployments, not someone on the team tried ChatGPT, but AI integrated into actual workflows across the firm. That's a striking number for an industry that's historically been slow and conservative about adopting new technology, especially anything touching actual investment decisions. This isn't abstract. Org-wide generative AI deployment at an investment firm typically means AI tools embedded across multiple stages of the investment process, research analysts using AI to digest earnings calls and filings faster than any human could read them manually, portfolio teams using AI-assisted models to stress test scenarios across thousands of possible market conditions, and risk teams using AI to monitor exposure in real time instead of relying on periodic manual reviews. The key shift is speed and coverage, not necessarily better judgment. A human analyst can deeply read a handful of earnings calls per day. An AI system can process hundreds, flagging the ones that actually warrant a human's deeper attention. That's not replacing the analyst's judgment, it's changing what the analyst spends their limited attention on. Firms adopting this at scale are essentially buying back analyst time and redirecting it toward higher-value judgment calls instead of manual document review. Here's the uncomfortable part. If institutional firms are using AI to process information faster and catch signals earlier, that's a real information speed advantage over retail investors who are still reading the same news through a normal browser at normal human reading speed. This isn't a new phenomenon. Institutional investors have always had a speed and information edge, but AI is widening that gap faster than most previous technology waves did, because it compounds. Better AI tools mean faster analysis, which means faster positioning, which means retail is systematically a step behind on the same public information. This isn't a doom framing. Retail investors have never had informational parity with institutions, and long-term investing doesn't require winning the speed game. But it is a real, current shift in how much of an edge speed provides, and pretending institutional adoption doesn't matter to individual investors would be dishonest. If you're actively trading rather than long-term investing, this gap is directly relevant to you. The honest news: you cannot replicate a hedge fund's AI infrastructure, and pretending some consumer app gives you parity with institutional research desks would be the same kind of overselling this channel exists to push back against. But, can't fully close the gap doesn't mean can't close any of it. The category of tools available to retail investors right now, AI stock research and grading tools, AI investing assistance built into consumer brokerages, AI-assisted financial news summarization, are consumer-grade versions of the same underlying idea institutional firms are using: process more information, faster, and surface what actually matters. They're not as powerful, they don't have proprietary data feeds, and they're not backed by teams of quants. But using them consistently moves you from reading whatever headline you happen to see, toward systematically processing more of the available information, which is directionally the same shift happening at scale on the buy side. The practical move: pick one or two AI research tools that fit how you actually invest, and use them consistently as a research habit rather than a one-time novelty. The gap between retail and institutional will never fully close, but the gap between retail investor using no AI tools and retail investor using AI tools consistently is closing fast, and that's the gap actually within your control. The 77% number isn't a reason to panic about being left behind. It's a reason to stop treating AI investing tools as a gimmick or a novelty, because the most conservative, risk-averse, capital-protective institutions in the world already decided they're not optional. That's a stronger signal than any individual tool's marketing claims. If you've never used an AI research tool for your own investing, pick one thing this week, one stock you already own, and run it through an AI stock analysis tool just to see what it surfaces that you missed. Comment what it caught, because I'm collecting real reader examples for a future video on which specific gaps AI tools actually close for retail investors. Subscribe if you want to keep closing that gap alongside this channel.